Just under 2 minutes here until the closing bell. Right across the screen, Dow now off just over 40 points. Let's get to Jared Blickery for a closer look at some of these movers to the downside into the close. Jared?
Yeah, that's right. And let's take a look at some charts here. We're seeing the Dow recover almost to its session highs. If you look here, almost clawed into the green at the open, and maybe can do it by the close, although we're running out of time. Only 90 seconds left. S&P 500 off about 0.25%. Nasdaq off 0.4%. It too is pairing some of the day's losses. Finally, Russell 2000 just about break even right now. Now, looking inside the Nasdaq 100, the mega caps mixed, albeit mostly to the downside. Amazon has been a standout all day. It is now up 1.5%, but Microsoft down 1%, Apple almost there, and Tesla down 2%. If you look at some of the other big winners and losers here, guess what? Western Digital up 6%. The story there, pretty interesting, is that well, we talk about cryptocurrency and proof of work. Well, now there's proof of storage. And so as a solid state drive maker, it is benefiting from this. But if you go to the rest of the chip stocks, not having the best day, although off their lows as well. Taiwan Semi, ASML, KLA Tencor, each off about 2% there. Now let's take a look at the sector action. As we close in on the final seconds here, we got the energy sector up 2%, followed by materials, financials, and real estate. Those are the only ones in the green right now. Utilities, communication services, and tech are the biggest laggards here. And finally, we'll take a look at the travel sector. Out of the reopenings here, American Airlines really having a standout day, up 4%, and there is a first closing bell of the week.
All right, we have a closing bell, and as things settle, you can see the gavel falling. We are going to be in negative territory. Let's see where we expect the markets to settle. The Dow's going to be off about 56 points. The S&P 500 down about 10 points. Nasdaq's going to be down about 50, almost 51 points. Some of the losers today on the Dows, we just heard from Jared, is it's been quite a day, but when we take a look at some of the different sectors that have been problematic, energy was pretty good. It was up 2.3%. Everything else pretty much in the red other than materials. Let's get back to our guests. We've got James Liu from Clearnomics, founder and CEO, as well as James Bruderman from 1879 Advisors, the vice chairman. James, let me start with you. What do you make of this kind of sell-off? And then we had the recovery last week and now another sell-off. Was that a dead cat bounce?
No, I actually think we're going to go sideways for a while. I think that there's a lot of fuel in the tank. You've heard me say that before. The economy is strong. We've got a lot of stimulus. A lot of it's still unspent. The entire economy hasn't come back yet. We're really starting to see hospitality and entertainment driving some growth. I think we're in a great place for the next couple of years. I do think that multiples may have gotten a little bit ahead of themselves, but there's plenty of time for catch up, and I don't think I don't think there's any need for panic at this stage.
James Liu, the fear of inflation that we saw creep back into the markets last week, driving much of the action, still obviously a relevant story today. How fearful or how worried, I guess, are you about what we saw in the print last week and what we could potentially see over the next couple of months?
Well, that's a good point, Shauna. The markets have basically made inflation as the battleground issue for determining whether or not it's really this rotation trade that'll win out the rest of this year, or whether it's the tech and growth stocks that were winning out last year. And you've seen this bounce back and forth throughout the course of this year. So right now, what we're seeing with inflation is you are having those base effects come in. Everyone has called those transitory. You're seeing supply and demand issues in certain sectors, and of course, that's pushing up prices. What we're really not seeing is what we would normally call monetary inflation, which is what you saw in the 70s and 80s. And that's really where big inflation protection in your portfolio really comes into play. So for right now, we think that it pays for investors to stay invested and to basically look out for the second half of this rotation trade through the rest of this year.
But just following up on that, James, would I want to stay invested in tech? I mean, tech has really been having a rough go of it this year.
That's right. Well, we think that when you look at the rotation versus the tech and growth stocks, really it's about timeframes, evaluations. Timeframes right now, we think it's the rotation trade that's taking shape. That's really the focus. Long term, the secular trends in tech are still there, but again, the valuations are pretty lofty right now. We would expect that those come down over the next 6 to 12 months, and then it's a much better place to get in.
James Bruderman, how about you? What do you think?
I think it's a tale of two tacks to a certain extent. You know, we've got those traditional bread and butter tech companies like Amazon and like Microsoft that have been around for a long time. They've got strong earnings, versus the tech where the earnings picture is not as clear, where the earnings is a promise for tomorrow. And I think those tech stocks are subject to much more repricing pressure as interest rates normalize. But in terms of opportunity for tech, you know, great large tech companies with growing market share, with dominance in their industries, and with steady and growing cash flow, steady and growing margins, I think those companies are the type of bellwethers that are immune to any inflationary effects.
So, James Bruderman, when you say immune to inflationary effects, as we see now, the mass restrictions essentially are going to be gone across the United States. If the reopening economy really takes off, would I want to be out of those pandemic stocks? I mean, the Zooms and the Slacks and the work from home stocks, and be looking at other tech stocks?
I think that I think that's a reasonable assumption. I mean, some of them have certainly seen their day. We're not going to use Zoom as much, but at the same time, Zoom has gotten their market share. Amazon has gotten their market share. Everybody knows how to use those products now, and they're not going to fall back to where they were before. They've got their jump. They've got a new base that they can build on, and I think there's a lot of utility for those companies in helping to boost productivity. You look at something like Microsoft, for example, and their penetration of the cloud, and the opportunity for companies to really tap into those types of tools to expand their productivity. Look, our story for a long time has been productivity is going to help drive future gains and is going to help offset the risks of inflation. And there's a lot of great tech companies out there that are going to support that and that are an important part of that story.
James Liu, when we take a look at what's happening in retail, we got the retail sales number last week. It was essentially flat. We're going to be hearing from Home Depot, Lowe's, Walmart, a couple of the big names over the next couple of days. Are you expecting to see a rebound, or the continuation, I should say, excuse me, of some of the strength that we've seen over the last several quarters, or will some of that begin to fade here since we are getting to the other side of some of these recovery plays?
Well, Shauna, we do think that earnings are going to be really a bright spot in the recovery story throughout the rest of this year. You take a look at economic growth, and we expect that by the end of this year, we'll be back at pre-pandemic levels. And when you look at corporate earnings, you know, some of the ones you just mentioned, overall corporate earnings for the S&P 500 will far exceed about $185 versus $160 pre-pandemic by the end of this year. So that's really the bright spot. And because of that, you should see some of the lofty valuations across the market start to moderate. But we think the main beneficiaries of that will still be those that will start to grow as the economy recovers. And so we think that the rotation aspects of the trade are still in line with where the market is projecting forward from here.
James Liu, if I hear you correctly, if we're back at pre-pandemic levels, all things being equal, the one thing that won't be is that everything's going to cost more. Isn't that going to put a big dent into earnings as we go forward?
Yeah, that's right, Adam. So inflation, of course, is the battleground. That's where investors are trying to weigh back and forth which way is the rotation versus the tech trade going to go. But ultimately, we think that most of these companies will be able to pass on those costs. I mean, you look at the sectors that have done well so far this year. It's energy, materials, industrials, financials, all areas where despite higher commodity prices and underlying prices, they've been able to pass on those costs and therefore benefit and have boosted their earnings. So we think that at least in the short run, during the early stages of this inflation uptick, we think that companies will still benefit in their stock prices.
All right, let's go over to Jared Blickery quickly for a final thought. Jared?
Quickly, we are in for potentially a crypto winter, but fortunately that only lasts about 3 months, and that would have to be the South American winter as well. I just want to go over the prices. This is year to date, and we've seen Bitcoin consolidating, going sideways for several months now. Finally broke down. We do have potential support around 40,000, but I've been talking to some people today, and there seems to be a consensus among some of the people who are out of the consensus that we could see some kind of flash crash down to the 30,000 level. And that would be akin to a market clearing event, like, negative crude at negative $40 per barrel. Nevertheless, nobody thinks that it's the end for Bitcoin, but just that we're going to have to see lower prices because of all of this consolidation that's finally getting sold here. Who's the biggest seller? Probably going to be Tesla and Elon Musk. Just a prediction here.
Jared Blickery, thank you. And thank you, James Liu, Clearnomics founder and CEO, as well as James Bruderman, 1879 Advisors Vice Chairman.